All right, meeting is now streaming live on Facebook. Things are happening. All right. Let me mute this. Welcome everybody to another episode of Money Monday. You just heard all my technology starting to freak out a little bit there. I don't completely know why, but it looks like it's working now. Yeah, welcome. My name, as always, I am Henry. I am your friend in finance. I am so excited to be here with you this Monday. Hope everybody had a great Passover, great Easter weekend. Bear with me 1 second while I do my normal thing where I share to, there we go. Awesome. Also, at some point, my dog might be coming up just to kind of prepare you all. Today, what we're going to be talking about is something that came up in conversation earlier today, the importance of psychology when it comes to investing. Because everybody thinks of investing, oh, it's investing, financial planning. It's totally just numbers. Totally understandable why you would think that. The truth is that like 80% of investing, financial planning comes down to the psychology of it. Because ultimately, it doesn't matter what plan you set up, if life happens, because life will always happen. If life happens that knocks you off your path, off your plan, then that plan wasn't strong. That wasn't a good enough plan. So the majority of being a financial planner actually ends up being the psychology. How do we handle downs? How do we handle the high? And everything in between. Actually, and this is something that Planet Act, we're very focused on behavioral science behind everything, all of our suggestions. We're super focused on that because we want to make sure that any plan we offer anybody is actionable. We want to make sure that you can actually follow through on things on the plan we suggest. Super important. At least we thought so. We've always thought so. It's actually come out that first of all, just a little background, the highest accreditation you can have as a financial planner is being a CFP. Certified financial planner. It means you've basically got a working knowledge in like every single area of personal finance. Super hard to get. Take literally years to be able to get this certification. It's a path that me and Chris are on. Bob is a CFP, and it's super important. One of the best out there. One of the things that we discovered is that the CFP board is now including the behavioral science, the psychology of financial planning as one of the pillars of the accreditation, basically. So part of the coursework that we're going to have to pass is the actual psychology of how do you help people actually follow through on their financial plan, which is great for us because we've been doing that forever. We're way ahead of the curve, but people are catching up. So you're probably asking, like, so how are we actually going to talk about this financial stuff? Well, I got some slides. Okay, so this is pretty exciting. We use dimensional fund advisors they are basically these incredibly intelligent academic investors who have come up with theories and ways of making a lot of money easily. God, that's such a terrible way to describe it. They run mutual, and they run very good mutual, and we actually recommend them and use them for our investment management clients. Incredibly intelligent people. They hired Nobel laureates before they were Nobel laureates. That's how good they are. They hired these people that they just knew were very smart, and then those people turned around and got them right. So CFA. As they're called, they came out with this presentation recently where they were talking about the year in review. So basically, what's happened in the past year? We're a little bit beyond, just a little bit, like a couple weeks beyond the 1-year anniversary of when the market hit bottom. If you remember those first couple weeks after COVID, states started going into lockdown. The stock market went crashing down and hit bottom. We're actually a few weeks after that, just beyond that 1-year anniversary. So the whole presentation was on what have we learned, and actually, Bob and Chris watched this. They thought it was so important. It was such important information that they actually tomorrow night, they're going to be actually doing an impromptu webinar. This is a super short notice. This is just so important that they want to make sure that this news is still relevant to people. So they're going to turn around and do this webinar tomorrow with the entirety of all the slides the FA had. And Bob's going to talk about how this is relevant to you. So I actually included a registration link in the description. So sign up, click register for it. So it's going to be through Eventbrite. This is also incredibly important for anybody who's thinking about going into the stock market. So if you know somebody who's thinking about jumping into the stock market, share this video, click that share button, and we can try to get some of the word out about some of this very important financial education. So in kind of service of that, Chris and Bob, they gave me permission to actually use some of the slides, especially since they use Zoom. I'm going to actually give you a little bit of a sneak peek into what they're going to be talking about tomorrow. Give me 1 second, gonna pull it up. And here we go. All right. So yeah, this is so gonna just give a little bit of a sneak peek into this. Okay, making sure that the technology is working. Fantastic. There's the slides. As you can see here, this is basically the past year. This is 2020, and this is going to break down. Different phases of it. I'm just going to give you 3 of the slides here. You can see there's a total of 8, and then tomorrow Bob's actually going to be going into more detail on specific aspects of it and how it can actually benefit you, how we can help translate this into, because this what does this line even mean? He's going to be helping translate that into what it could mean for you specifically. As you can see, the beginning part of the year, we started out going, it was going, like normal. This is the value of a dollar over the course of the year. Around March, that's when COVID started hitting the world, and then you can see it just had this sudden drop until it hit rock bottom. I think it was like March 27th or something like that. Just lost basically roughly, I think it was like a third. That's a very rough estimate of the amount that the stock market lost in total, right around there. Now, psychology is super important when it comes to investing, because you can have a plan for investing, but the thing is, you gotta ask yourself. You gotta always be asking yourself, what happens? How am I going to react if this happens? This is one of the reasons why with every client, it seems like a random question. Please, with every client we go through and I ask, how have you reacted, or how do you think you would have reacted if your investments lost a certain amount of money? It's super important, because if your investments drop and your initial inclination is, I'm doing terribly, time to sell everything so I can protect everything, that's not necessarily a bad thing. But being honest with yourself is super important when it comes to that, because then we can form a strategy around that, because because there's different types of people. What ended up happening for me is that the stock market started going down, and then I started buying. There's no right answer for everybody, because what ended up happening was that, as you can see here, even just after 1, 2, 3-ish months, the stock market, maybe 3.5, the stock market started to go up again. You can see that there. We started having a little bit of recovery. There were some rocky parts there in the middle, especially some pretty jerky areas you see there, but it still started generally going back up. Now, so part of the investment strategy here too is you got to ask yourself, now that it's going back up, how would you react? There's different ways to kind of mitigate this. For instance, if you know yourself to be one of those people who you just don't like losing a lot of money, you know that if you saw yourself losing a lot of money, that you would very quickly just kind of jettison your previous plan and start over, basically. it's not necessarily a great idea to just kind of throw away a plan just because of a hiccup in the road. But one of the things you can do is you can buy some safer investments along with stocks. So, bonds are usually pretty boring to investors for some reason. And actually, the reason is because they're not as volatile. They don't get as much of a return over time, but they also don't do this doesn't happen to bonds to such a degree. Bonds have they do have ups and downs, but not like this. You're not going to suddenly lose 30 cents on the dollar over the course of a month. So bonds are a good way to kind of balance out the risk in your investments, so that you don't have these extreme rises and falls. And that can help you stick to your plan. Ultimately, one of the most important things with any financial plan isn't even the numbers, it's just sticking to it. Just stick to the plan. Whatever plan it is you have, the chances are you're going to do really well over time. But that's the hard part, sticking to it, especially when the market is bad. Like suddenly people woke up and they discovered that they thought they had $100 and they only had 70. They lost $30. Or they thought they had $10,000 and they found out they thought they lost $3,000. Can you imagine feeling like you lost $3,000? Other people see this and they go, oh, that means everything is on discount. So everybody's got, if there's no right or wrong way to approach it, everybody's got different perspective. But being able to acknowledge your perspective, it is going to help you create a stronger plan that you're going to be able to stick. And the reason why it's important is because there's always hope. In the middle of this, I remember people talking about we're not going to get back out. This is it. Where the market is just down here. People just lost a lot of money. This is cool. I had some people warning me to man, we all freaked out. We all bought so much toilet paper, right? We were all prepared for a literal worst case scenario. What if we never have toilet paper again? We were so prepared. We bought a 10-pound bag of dried beans that we haven't eaten yet, because dried beans gotta soak them before you can eat them. That takes too much time. So everybody went into survival mode, and everybody got kind of crazy there. Some of y'all are still hoarding toilet paper. Who knows? So what do we do that? So it's very important to acknowledge those feelings, because we all have those. So when we are looking at our investment strategy, we want to be able to actually try to plan for that a little bit. So it's important. This is all great. Oh man, I love this graph. This is also important because look at what has happened over the course of the past year. We had this huge drop, right? And then over the course of a year, we not only hit where we were before the pandemic, and there was a little bit of rockiness right there, but we even went above it. The stock market just kept gaining and gaining, which I think is incredible. It's just incredible. This in this unprecedented year. And I know a lot of people, just regular investors, so long as they didn't. I know some people who made some money, even in GameStop, but being in the stock market for the long haul, we had these losses, but we were able to erase those losses by the middle of the year. Well, I guess that's 3/4 of the way through the year last year. So just some incredible results that came out of this incredible thing. It's just awesome to just see it all in one place. I'm a numbers guy, so I really like this kind of stuff. So there's all kinds of stuff that we can interpret from this, lessons we can learn from the stock market over the course of last year. We're going to go over a lot of that tomorrow. Bob's going to dive into it. What does this actually mean as far as for some people, what does it mean as far as retirement income? How much time could you have lost if you dropped out at certain points? What does all that mean? And there's even more slides that are coming up next, which I won't get into today. and they're going to be going over things like what do we still need to watch out for? What are some opportunities that are going to be coming up? Bob's going to go over all of that tomorrow. Like I said, I put the registration link in the description, so click on that registration link and join us tomorrow. It's going to be a great time. This is so important. I think as soon as Chris and Bob saw this, they were texting me going, "Hey, how can we do this?" And I was like, "Well, okay, that sounds like we need to do this. It's super important to you." So, yeah, join us tomorrow. It's gonna be a fantastic time. Oh, man, I love numbers. Numbers just illuminate and with clarity to everything. I'm gonna stop sharing now. The other thing that I do want to make sure I mention is that next week we're not going to have a Money Monday because I'm going to actually running our first. Oh goodness, that's my phone. I gotta remember to turn that on vibrate next time. So next week we will not have a Money Monday because I will be leading the first monthly mastermind for our clients. I'm looking forward to it so much. It's group coaching. So basically, being able to have an advisor giving advice to at scale to a lot of people at once, and not only that, but just creating a safe space for everybody, so everybody can bring their problems in. We can brainstorm, we can support each other, and we can even take away some lessons every month. That's something I've been very excited about. We've all been excited about here at Back. Besides that, remember, you take nothing else away from this video. The most important thing about a financial plan is sticking to it. And because of that means that the financial plan that you craft for yourself, whether an advisor crafts for you, should be one that you can stick to. But the most important thing is sticking to it, and that's where the psychology comes in, and that's why Plan and Act is ahead of the curve, because we live and breathe this stuff. So that's it for me today. Thank you all so much. I hope to see you all tomorrow. Again, link is in the registration, and link to the registration is in the description. If you think this is important, having a review of the past year of unprecedented events, then please share this video, or don't miss out yourself and register for our newsletter, which I've also included in the description. Thank you all so much again. Hope you guys have a good week, and I hope to see you tomorrow.